Hi, my name is Dmitry Tikhomirov. I'm Associate Professor in High School of Economics and Head of Financial Modeling Group in State Corporation Внешэкономбанк. And we have a lecture on Introduction to Financial Modeling. What we need to discuss in the lecture? What is our contents? First, introduction. What is financial modeling and financial model? Who needs financial modeling and financial model itself? Where are the models used? Then we discuss general layout and architecture and style of financial models. Then we need to discuss major components, how to present results, inputs, different calculations of different parts of the model, pro forma of different parts of financial statements, key ratios, and other issues. Then we discuss in more details key ratios, differences between models for business valuation, for project finance, and maybe we mention some other reasons to prepare financial models. Then we discuss in details golden rules that are applied in financial modeling. Different ideas like flags, simple and complex formulas, proper layout of any financial model, links between formulas, and other issues. And then we turn to information sources for modeling and how to present inputs and how to select appropriate inputs and assumptions. So first part is introduction. We need to discuss what is financial modeling, who needs financial modeling and financial models themselves, and where are they used. Here we see a brief definition that financial model is some summary of a business or entity or project future performance based on certain assumptions. And here we see example of some results or outputs working sheet. And you see the major information, some basic information about the company or project, then some switches or choices between different scenarios, then major ratios like NPV, IRR, total capital expenses for the project, and many other, and some graphs. And we will discuss this in more details in our course, how to calculate this, how to present, what are different ways to present, and best practices, and sometimes like worst practices or mistakes that people do when they prepare and present financial models. Here we need to mention this is example of templates or examples of financial model of State Corporation Внешэкономбанк of WebRF that you may see for free on the website and look into more details if you need this. Now we turn to the use of financial models. There are several uses and we here mention only the major of them. First, management needs. When top managers of the company need some financial model of any level of detailization, maybe very detailed, maybe quite general, for their, first of all, long-term planning for 5, 7, 10 years, but also for some maybe shorter-term period where they used forecasts, short-term or medium-term budgets, and where they need to calculate their future performance and understand what will go on with their business. Then, very important type of use of financial model is business or assets valuation. This may be independent valuation of any independent consultants, different companies, then internal value-based management, when again management or shareholders want to understand what is the value of the business, of future cash flows. For example, they discount to current value, to present value, and then they try to monitor how value of the company changes over time. This is not really very often because this requires a lot of efforts to do this, but this is quite popular concept nowadays, and big companies try to understand what is going on with their value. Sometimes they even try to hire independent consultants for this, but again, this is not really common, because this will cost sometimes a lot, and again will need extra efforts to value. Imagine your company, for example, every quarter to try to understand how your value of your business, total business, enterprise value or equity value changes from quarter to quarter. Then, very important type is project finance and corporate finance, where you, for example, in classical way of project finance, you organize a specific structure to obtain finance from one bank or several banks. You organize special purpose vehicle, special purpose entity. There are a lot of peculiarities in this type, and a financial model is generally more or less the same compared to detailed and proper business valuation, but there are some additional complexities and peculiarities, because in project finance you, for example, as the owner of the project or as the bank, you need to go into more details, because you have a lot of risks and you need to understand a lot of different assumptions, a lot of different factors and ratios for your future business. Then, also, you may prepare financial model in specific cases of financial statements preparation. When you do impairment tests for fixed assets, for intangible assets, including goodwill, and for other needs, you may prepare financial model to compare, for example, your future cash flows discounted to current date. You calculate so-called value in use, and you compare with the amount of your balance value of your fixed assets and intangible assets, which are called carrying amount. And you try to be on conservative side. So you, for example, impair your assets if their carrying amount exceeds value in use or fair value. There are again, a lot of specifics and peculiarities in this methodology. We do not discuss in details. You just need to understand that you may need financial model for this purpose. Then you may need financial model to understand state support, and also for state planning needs, for preparation of budgets for different state authorities. And even if we speak about some business, about corporate finance, you need to have financial model to demonstrate to the state authorities in case you need some state support from the government, from regional government, for example, different subsidies for interest, for operating expenses, when everybody understands this your business or project is really needed for the region, for some industry, for the country. They will provide state support, and again, you need to demonstrate your future projections, your potential problems in the future, and a lot of different similar issues. Then, we may say that financial model is used in decision-making process at different management levels, as we mentioned. And here we have just some examples. When we speak about senior management, certainly they are more concentrated on the final results, on different scenarios, on sensitivity analysis of different factors. So they are more interested on the the major information from the model in a nice to see and clear to understand way. Then when we speak about project managers, they need to go into more details for different operational issues, for different details of assumptions, compare and check calculations, and a lot of much more details stuff here. When we speak about business units, they may need reports and again scenario analysis and risks and comparison of ratios between different segments, business units. And we may imagine a lot of other users on different levels of a company, or imagine of a huge group of companies. And financial model, if we speak about one complex financial model, needs to comply with all these needs, from really operational and lower level of specialists and managers to the top managers of the company. Again, we see a different example particularly for project finance, different stage of your business or your project, and the use of the model. For example, when you come to some bank or some investor, in this case to the bank, with your project, you understand this will be a long period for review, to obtain finance, for all these issues and stages. And we see from the very beginning to the very end that your model may be used for express analysis in the very beginning. For example, I don't know, it will be half a day or 3 days or 2 hours. So very brief view on your model to understand the major issues. Then preliminary but more detailed review and discussions of the model. This may take several days or weeks. Then it will be complex review. They may take several months or even 1 or 2 years for all discussions together with all other issues. Then different models may be used for share valuation and collateral valuation that you will give as a pledge to the bank. And then finally, for financing of the project, for valuation of property injected in equity of the project, and then for monitoring during the financing of the business or the project. And then if something will go wrong, then financial model may be used even for different restructuring options, and then even to calculate value of your company in case of bankruptcy, to understand the value of specialized assets, and for different other purposes. Here we see that financial model is a part of a set of documents that are presented to the investor or to the bank. If we speak, for example, about project finance, then the major document that is presented is business plan. And we see just example that you present a set of documents like proposal or brief information about your project, investment application, detailed business plan, and financial model in Excel, a kind of addendum to your business plan that should be reconciled, and then ownership structure and a lot of about concept of your project and all other documents we do not discuss here. But we see financial model is really linked to the business plan. So we may say that financial model is a part of business plan containing the major information, financial forecast, and different type of analysis, including input data and assumptions required for elaboration of financial forecast, then different financial forecast and calculations, and final financial forecast results in the term of pro forma financial statements, key performance indicators, different ratios based on the needs of the user of financial statements, and different scenarios and different layout of sensitivity analysis, and additional comments and additional information. We may say that financial model should reflect all quantified aspects of the business or proposed project or even already started project. What are these issues that need to be included? For example, these are not all, but the major ones. Capacities and reserves. So you need to include in your financial model proper information about your potential output of your production of goods or reserves in the case your business in the field of natural resources. And usually this is done like you have some maximum level of capacities or total reserves, for example, and then you have information on every period. Utilization of your capacities, some ramp up from low level to normal, stable level of the use of capacities, and annual or quarterly output of your production. Then several marketing issues also need to be somehow included in the financial model. Easily we may say this in just information about price, again quantity, then discounts, then different probably commercial expenses to sell some product. But the most important here is information about prices, because for this usually you need some marketing report, a lot of detailed analysis on these prices, how from benchmarks with different adjustments. Maybe if you are not sure and this is some specific good, you may construct different scenarios for this, like normal scenario and more conservative scenario to understand your ratios if something will go not as planned, and different other issues. Then you have technical and technological aspects. This will mainly be reflected in the model in terms of your costs of production and what are costs per unit, how this will be reflected in your operating profit margin, and finally net profit margin, in all these types of financial forecasts. Then you need to have information about all real and possible taxes that you will pay in your business or in your potential project. So we may say that there are 5-7 the major taxes, like corporate profit tax, value added tax, property tax, and all other taxes for personnel, for other types of income or assets. Then information about transportation. Again, you need to understand what are possible expenses for transportation, what are probably you have only one way or probably several routes of transportation of your product, so you may calculate this in more details. This is a separate issue. Then ecological aspects, legal aspects, they are usually not so clearly reflected, yes, but they just need to be taken into account. For example, legal aspects, they are not so easily quantified, but just you need to understand what is legal term of your official term of your license, when this license could be cancelled. So you need to think for how many years you will forecast your cash flows, maybe for 2 years, for 5 years, for 10 years, or for example, maybe legally and officially your license for your activities will be maybe this license just have a limited period of time, but you will easily prolong, and so you do not somehow limit period in your financial model. And a lot of other issues about your business that you understand, they are important and could be quantified. You need to somehow quantify it and include in your financial model. The last point here is a discussion who needs to prepare financial model. For example, if we speak about some project that is presented to the bank, then the client or potential borrower is one choice, independent consultant is second choice, and bank specialist is the third choice. We may say that the best way, sometimes it's possible that the client or borrower will prepare, but the best way is when independent consultant prepares financial model, because he is aware of all requirements, he is experienced in this, he has experience of presentation and preparation for financial model for a lot of different projects for different banks and investors, and quality will be better. Quality, we may say, that is never ideal. So even to the best model presented and prepared by the best consultants, still users will have 5, 10, 20 or 50 different questions. Some maybe they find some errors, etc. But still quality will be much better and easier to adjust. Yes, when the last option that the bank prepares financial model is not the best, because for internal purposes it's okay when we prepare, let's say, some draft or simple recalculation, or we adjust the consultant financial model. But still, the client or consultants themselves, they should take the responsibility for the financial model. They know all the information, they have deep understanding of their project, because they are really deeply in this project realization. And finally, they need to have responsibility, not to say finally to the bank that this was your model, we do not know how we need to pay, and now if we do not have proper payments for our debt, this is your fault, because this is the model prepared by you, and we are not finally responsible for the results of this model. Now we turn to general layout and architecture of financial models. How to present model results. You always need to have a balance between some kind of standardization and unique details, and trying to have unique layout and calculation for your business or your project. Generally, we may say that it's recommended to use a standard list, standard dashboard, standard list of results for financial model, and then somehow adjust this for your purposes. Lists do not have a 100 fixed structure and can be changed in accordance with the purpose of your project or your ongoing business. So if we speak about some organization, some really big bank or big investment company or consultant company, they may have some basic layout and basic templates for financial models, but certainly they need to be finally adjusted very significantly in terms of calculations internally in the model, and maybe not so significantly, but also adjusted of the final presentation lists, final presentation results. We also see recommendation include different switches, graphs to present results of calculations and different ratios. Usually these ratios that everybody is interested are not only ratios, just forecasts, revenue, operating profit, EBITDA, different specific ratios for debt service like DCR, other debt coverage, and other information. Here we see example of one results list. We may call it different ways. We may call results, outputs, dashboard, control lists, all possible and honestly evenly used between different banks and consultants. Also, we need to say that it's not possible to make one full financial model template for all types of business and all purposes. Sometimes companies try to do this. For example, I know that some of Big Four companies or local consultants or big banks try to do a set of like one template for all or set of templates for different industries. But this honestly, we need to say that this is applicable to a simple or really standardized and standard instruments and standard business and simple business, simple financial models. Because if you have significant project, even in the same industry, you may imagine like coal mining or agriculture or construction materials or whatever. Yes, whatever business, you need to take into account a lot of peculiarities of this business, and each time the calculations within the model will be somehow different. But again, as we see the final result, we may structure and do more or less standardized. On this output list or results list, we need to present first, general information about the company, name of the business, date, very important, date of our analysis or preparation of financial model. I mean, not date that we prepare today, but the date of start of our forecast. This usually could be like beginning of the year or end of the year or end of June or end of any quarter. Easily you understand this based on the information that you have when you prepare financial model. Yes, what is the start date of your financial model and financial forecast? And in this way, you will properly divide between historical information. Before this, you may do even in some color, like gray color will be historical information, and the normal color will be like all your forecasts. Then, but this will be later. On the top of this list, you will have also switches to change different forecasts, maybe prices, quantities, discount rate, whatever. Again, you need to change here what is important for your business. Maybe you have only one or two assumptions that could be changed. Or maybe in some models we have 40 or 50 or 100 different assumptions that could be changed. Yes, about different assumptions, different subsidies, different terms, discount rate, interest rate, everything about your project. But the best practice is to select 5, 10 major assumptions to make these switches or choices. And then you present the major financial ratios like NPV, IRR, payback period, discounted payback period, and also additional information like EBITDA margin, EBIT margin, range for your discount rate. Again, what is important for your project or business here. Then, lower on this slide, you see more or less the same information, but but presented from year to year. So all details forecasts here of the major ratios and major information. So you see usually from the top, like revenue, different expenses, operating profit, capital expenses, and all other types of your forecast. What is also important here, not to forget on this results list, are different diagrams or drawings or graphs. In this case, this is the list about project finance. So we are concentrated on your cash flow and debt repayments, on possibility how you will repay your debt. Also on this list, but we do not see here, you may include different checks. That assets are equal to liabilities, your NPV is higher than 0, so a lot of other checks of potential errors or mistakes in your financial model. And here we have this example in more details, in a better view to comment on. So what we see here, the forecast of your cash flow imagine cash flow available for debt service here from year to year. Then at some point of time, you start to repay so you also repay your interest. At some point of time, you start to repay your debt. So you see clearly and easily to understand on this graph that your cash flow is higher at any point or at any period than total amount of your debt and interest payments to the bank, for example. So you are happy, you are comfortable that this is okay. And also we have here calculation of different ratios, for example, debt service cover ratio. You may also include here different other ratios if you need. And on the lower graph, you see the forecast of debt and total debt outstanding, so balances of your debt. Yes, in the beginning, you do not have really huge balances, but at some point of time where you spend different capital expenses, you obtained a loan, you see significant balances, and from year to year you repay your debt, and finally you come to the end of the period and you have full repayment of your debt to the bank. We may recommend here, when we speak about these graphs, or even about detailed financial model and detailed forecast, you need to have your period of forecast longer than your expected period for repayment of your loan. For example, if you expect here that you generally in your standard scenario, in your basic scenario, will repay your debt in 2027, we may recommend that you prepare your financial model for 2030 or 2031. So you have 2, 3, 4 years of additional periods. Why? For different reasons. First of all, to play with this model, to change scenarios, and to understand that maybe what if your prices will be lower, costs will be higher, so some a little bit more conservative scenarios, how you will repay your debt maybe in 2 or 3 years later, it will be still okay. And also not only for scenarios like for sensitivities, but really if you need to prolong your debt, you understand you will not be able to repay everything in 7 years, so you will need to repay everything in 10 or 11 years. So not to change your whole model, but just to play with these cash flows and apply in your basic scenario longer period of your debt repayment. And here we have the main rules for the model structure. The main rule is to separate input data, calculations, and results. And here we see different blocks of like input or assumptions information. This could be one slide, one page, one working sheet in Excel, or this could be several. Sometimes consultants separate between time-dependent and time-independent assumptions, but generally we may say they could be also presented on the one working sheet. Then you have calculations of different financial forecasts. Then you have final results, pro forma financial statements, and the final results list that we have just discussed. And you may have additional secondary list, additional information, etc. What are advantages of this separation between input, calculation, and results are, first of all, single entries of input data. So you apply and you have information about prices, quantities, everything on a clear, in a clear part of your financial model, and only once So you do not have a problem that in one part of your model you have one information about prices, in another part of your financial model a little bit different forecasts of your prices. Then easy to modify the model, so you change somehow, you play with these assumptions, and all your other forecasts, the whole model, will immediately in Excel react to this. This is clear. And also logic of these calculations, and finally you have logical calculations because they go through the inputs to the final results through all types of calculations, which are clear and easy, nice to understand finally in your model when you prepare and when some people will review the model. Now we move to golden rules in financial modeling. We discuss flags, simple or complex formulas, layout, and links between formulas. Here on Here on the slide, we see a model example and not the best case. This is a real example, real screenshot from some financial model where you see two complex and two complicated formulas. One calculation that needs 3 or 4 hours of detailed review. Certainly you need to go into all these parts of the formulas. You jump from this working sheet to another working sheet, then you go back and you jump around the financial model for half a day. And even after this, you are not absolutely comfortable that everything is okay. And the main problem is not this, but that you will do the same procedure every iteration if you want to check all details of the calculations. And you clearly understand that you work with this model several times. For example, you review today, then you will have some small changes in the model 2 weeks later, then 2 months later, etc. And generally during the project, you will have 10, 20, 50 different iterations and steps, and each time you will need to review such huge formulas. So the best way is not to apply such complicated approach, but just to divide this formula into different parts, easy to understand, clear, and easy to review, and this will give you comfort that everything is finally okay with the model. So we have different rules for structuring of calculations. Some of them we have already mentioned, but let's discuss all of them. First, separate input data, calculations, and results using different sheets or sometimes different blocks of calculations. But the most widely used approach to use different working lists or working sheets. Then, separate calculation blocks and section within the same list. Yes, you may have like inputs list, but you have time-dependent, time-independent, different other assumptions, and you clearly separate them just to have nice and clear picture. Then use the same formatting along the whole model. So similar fonts, similar size, similar colors, somehow sometimes even consultants even prepare a separate part of the model where they describe this formatting, different colors, different fonts, to make it easier to navigate throughout the model and to understand finally. Then, what is more important technically? Use uniform and standardized formulas 4 different like columns in the same row. Sometimes you may change something, you will highlight, but generally when you start to calculate your revenue expense, capital expenses from the first period, your formula should be absolutely the same up to the end of your forecast period. Then we use unified approach for dimensions of the sheet. So everything is like in million rubles, billion euros, 1,000 rubles, etc., etc. And they should be either absolutely equal throughout the model or somehow highlighted that, for example, on the input sheet, you may have something in rubles or euros, on the final results in billion of rubles or billion of euros or other currencies. Then, very important, do not use fixed numbers in calculations and calculation sheets. They should be generally included only in, not generally, even always included in input list or assumptions list. So all the figures that you need to input into financial model should be presented separately on the working list, not then to try to find in some internal part of your financial model, in your calculations, these hard numbers and these figures without links. Because actually, if you will make any inputs finally in your calculation parts, in many times you will kind of kill your financial model. Then, do not hide rows and columns. If necessary, you may use some group of columns, group of rows, but generally we recommend that all information is openly and transparently presented on the working sheets and not somehow hidden, and do not hide also separate working sheets of your financial model. So if something is not really needed, in all times, in all cases, you may just delete and exclude from your financial model, and everything what is needed should be clearly presented. Then we need to limit use of cell names, group of cells. Sometimes people use this. For example, they say this is not a cell number B7, but this will be VAC. And this will be IRR, this will be NPV. So they assign different names to different cells. This is possible, but this list of names should be not so huge, otherwise it will be again difficult for you to navigate throughout your model. Then we need to avoid cyclical formulas, because in many times this will just lead to mistakes in the model. And then we need to avoid external links to some other working sheets or just list of information. Again, everything what you need to somehow include in your financial model. Then we need to simplify calculations, which is very important. And do not use macros except for really needed. In some specific cases, usually in for example, in private-public partnership, in some complex infrastructure models, you may apply macros, because otherwise it will be very difficult for you, not possible to recalculate different financial options, different scenarios. But in most cases, we need to try to avoid this. And then we may have some specific additional like golden rules or recommendations. For example, not to have complex formulas and very complex recalculations of your model. You may say that your requirement for consultant is that the financial model will be always updated in 10 seconds, not more. That you do not waste every time half an hour while the model will be recalculated in Excel. And then limitation of complexity of formula. So you may say that any formula in your financial model should consist only from 2 or 3 maximum formulas inside, not to have such a complex formula as we have just seen on the screen. Then we need some additional rules, simplify calculations, avoid non-transparent formulas like VLOOKUP, horizontal lookup, offset, too many if functions, and you need to use more effective, simple, and error-proof, clear parts of the formulas. And sometimes when people try to make too complex formulas, when they are not experienced in the financial modeling, or even this is funny, but they want to demonstrate that they have good skills and they are able to apply really huge and complex formulas. But clearly this is not a best practice and should be adjusted when the model is presented to some external user, to the bank, to the investor, to any other party. And one of very good recommendations is to use different flags. Flags are some values, usually 0 or 1, depending on period of time and on some fact. 1 means that some cell and some fact is active, yes, and multiplying something by 1 will result in the active figure and cell, and 0 means that some period is inactive and not active, and finally by multiplying by 0 you will have 0, you will not have some revenue or expense or investment in this particular quarter or year, for example. And you can use time flags, multiplying them by input parameters or assumptions. And here we have example how to simplify a formula. We have some information, some assumptions about price, about like inflation and period and total capacity and different periods of forecast, and we have different capacities in different periods. And in the first higher part of the slide we have formula for calculation of revenue. This is not really complex. Yes, in practice we may have much more complex formula, but still this is not very easy to understand. If you go for this if again and different references to different assumptions, but it's possible to calculate revenue in forecast by this formula. If you want to understand, you will spend 5 or 7 minutes to check in the first period and then how this formula is properly or not properly used in the next periods. And so you will be finally comfortable, but this will take additional efforts. And second, and this is not a best practice, layout or use of the formula. And second table, it looks like a more complicated table because there are a lot of additional information. But in fact, this is easier to understand because you have just beginning and end of the period, you have days in each period presented clearly in the table. Then we have flags, which period is active in each of these periods. Then we calculate capacity directly based on your assumptions and flags used. And then you just multiply it like capacity by price price is inflated based on inflation rate from assumptions, and you may, without going into Excel, without trying to jump between formulas, you may just yourself recalculate and ascertain that final revenue is calculated properly. What is also included in this example, that there are some differences between first and second tables, and I did this specifically on purpose. You see that they are very similar, but there is some small difference, and now I may say that second table is absolutely correct and first table is a little bit incorrect. Why? Because in the second table we use information about periods, about number of days in each quarter. Exactly, we calculate in the first period we have 90 days, in the second period we have 91 days, then 92, then 92, whatever days, but we calculate correctly and exactly in detailed way. In the first table, we just take approximation. We take, for example, 165 days divided by 4, and we say that on average each quarter has 91 approximately point something days. That's why revenue in the first table is different from the revenue in the second table. Certainly in this case this is not significant, because nobody really cares how many exactly days, 91 or 91.2 days in each quarter, on average or exactly in each quarter. But this example was to demonstrate that you may have additional, more significant mistakes that are not so easy to see when you have formula everything in one and not step by step with the use of different flags and finally in a simplified format. Also important to include different checks in the model. Again, we have some standard checks, and you may apply additional for your specific case. It depends on your need of your financial model. What are the most standard? That NPV will be more than 0, you have not negative NPV. Then present value of terminal value within this NPV should be lower than NPV. Yes, it should not exceed the NPV itself. Okay, in our case it's okay. Then forecast of DCR is more than 1 or more than 1.2, 1.3, some target ratio. Okay, in our model, in all period, we comply with this requirement. Then you have positive cash balance in all the period. This is also important. And particularly in project finance, and by the way, in business valuation, you need to check that your cash balance in all your periods is more than 0 and probably more than some target cash balance you need to have for your proper way to deal with your operations, with your investment activities, financial activities. Yes, you need to have some minimum cash balance just to operate your business. Then net book value of fixed assets is 0. Assets are equal to liabilities plus equity, certainly. Equity will be more, or net assets of your business will be more than 0. Then funds attracted is the same, equal to debt repayments. Usually this is called a little bit different way. Sources equals to users. So in each period and in total for your model, all the sources of your finance will be equal to the users of your finance on what you spend. And you may modify all these checks as you consider reasonable. Now we need to check understanding. First question, please select the correct statement. The financial model is traditionally used by the bank at the following stages: project review, preliminary or detailed and comprehensive review, financing and monitoring of the project, loan restructuring, and all the indicated above and other stages. Certainly proper answer is D, because financial model is used at all these stages when we do project expertise or review at different level of details, like brief analysis, preliminary review, comprehensive and detailed review. Then we are doing financing and monitoring of the project, then loan restructuring, if something will go on, even bankruptcy procedures maybe, and so any other stages and any other issues that make your financial model needed. Second question, we need to choose the correct statement. The structure of the financial model traditionally does not include the following: resulting in the major data and indicators, macroeconomic, sectoral or industrial and specific project assumptions, market analysis, and sensitivity analysis. Proper answer is C, that financial model is not always and honestly very rare includes market analysis, because market even we may say that never includes market analysis, because market analysis is a separate task. Yes, this is separate consultant, he needs to prepare a separate report, and if needed, we will use in our financial model for our business, for our project, but all these issues are usually in 99% time calculated separately. And all other issues are included in normal financial model. Question number 3. Please choose the correct statement. In order to simplify financial model and the calculation formulas, the financial model requires the following. First, use of macros. Then, avoid complicated formulas. Use links to other sheets. Or provide all data and calculations of the financial model on one specific and easy to understand working sheet. The proper answer is B. We just need to, this is very simple, we need to avoid complicated formulas. Now we come to final conclusions on our introduction to financial modeling. First, financial models may have different use, layout, and different level of details based on specific needs for your business, for your project, for other purpose. Then, there are no standard templates for all cases and types of business needs. The best way is to standardize layout of inputs, results tables, provide examples for some specific calculations and analysis. There are approximately 10 golden rules for financial models preparation and presentations that we have briefly discussed in this introduction module. There are different sources of forecasts. They should be reliable, relevant, consistent between each other. Nominal cash flows are preferred in practice. So cash flows with inflation of different assumptions and different ratios are generally preferred. Projections of specific items of income and expense and many other issues will be discussed in the next lectures on financial modeling.